Welcome back. Our lessons this week are found in chapters 5 and 6 of the testing book. Chapter 5 is quite short. Chapter 6 is the longest one so far at 45 pages. Chapter 5 covers a single page and consists of substantive tests performed at the interim. The interim is the period between finishing the audit report and the end of the fiscal year, typically December 31st. 4 items are presented here. The first, procedures that may be performed at interim. These include tests of controls and substantive tests. Relationship of the interim substantive testing to audit risk. This testing potentially increases audit risk. Number 3, considerations regarding substantive testing during interim. This points out the difficulty of controlling incremental audit risk, the cost of duplicating tests at year-end, reliance on internal controls and predictability of the year-end balance. And number 4, compare the balance at interim with the balance at year-end and investigate any unusual fluctuations as needed. The chapter concludes with an excellent explanation of dual-purpose testing. Chapter 6 covers audit procedures for selected accounts. There are 10 items listed. They include cash, accounts receivable, inventory, investment, property, plant, and equipment, including intangible assets, accounts payable, long-term debt, equity, income statement, and cash flow statement. We will examine the outline of procedures for each, together with appropriate comments on the unique features of each. For cash, we use a lead schedule. A sample of this document is presented on page 35. This is a summary of all cash accounts that have been transferred to the working trial balance. We begin by preparing the lead schedule and performing various tests of accuracy. Direct tests include cash inspection, bank statements, both loans and deposits, a test of the bank reconciliation. The audit does tests of transactions to expose kiting practices. The audit examines other financial statements, including foreign currencies, rights and obligations, and presentations and disclosures. A list of questions follows this section. For accounts receivable, we also prepare a lead schedule and perform analytic procedures. Various interim issues are discussed, and 3 pages of questions round out this topic. Item number 3, for inventory, we again prepare a lead schedule and perform analytic procedures. We also conduct test counts, measure values, observe inventories held by customers, and test transactions. There are 3 pages of questions following this section. For investments and derivatives, we again prepare a lead schedule and perform analytic procedures. In addition to the obvious tests, we also examine market values of securities. We also study the IR and CR of derivatives, the risk levels. This is presented in 2 full pages of issues that are unique to these complex securities. A half page of general questions follows. The same procedures performed for accounts payable with special emphasis on completeness. A table that compares procedures for accounts receivable versus accounts payable is very helpfully included. A page and a half of questions concludes this section. Long-term debt follows the same process. Additional liabilities examined include taxes withheld from employee pay, accrued payroll, and pension plan accruals. We immediately turn to equity, which includes an examination of capital stock and retained earnings. The last items examined are the income statement and cash flow statement. The importance of classification of cash flows as operating, investing, and financing items is stressed at this point. 2 pages of questions conclude this chapter. Although the chapter was lengthy, it consisted of a basic framework of analyzed and test that was similar for all 10 components. We will expand on a few items in class to complete our discussion of this topic. Recognize that next week is going to be the halfway mark. You've done a good job until now. Now is the time to bear down and persevere. And we're going to do great on this term. Thank you very much.